just sit back and listen when somebody wants to provide you some helpful information, which is great. I am going to ask you one last question, though.
Sure.
Will we see $1 million price tag with Bitcoin? Hey, everyone. This is Shad Dales. I'm the host of the Trade to Black podcast. Great to have you on us today. We're talking about crypto and more notably Bitcoin. This is a crypto asset that engulfs the majority of investors under the age of 35. But how about over the age of 35? Are they going to embrace it, including institutions? What is the future of Bitcoin? A lot of people are very optimistic. We want to learn more here today, and we're talking crypto. We welcome in, he's an American investor, hedge fund manager, and has a deep understanding of the crypto industry, and more notably, as I said, Bitcoin. Mark Yusko joins us. Great to have you on, Mark. Thank you for checking in today.
No, thanks, Shad. And look, I am the other side of that digital divide.
Yeah.
That digital divide is super real. I ask anyone over 35, who's your broker?
Yeah.
Merrill Lynch, UBS. How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, are you kidding me? Zero. It's a Ponzi scheme. Haven't you heard that Peter Schiff guy? How often do you use DeFi? What's DeFi?
Yeah.
Ask anyone under 35, who's your broker? What's a broker?
Yeah, exactly.
You mean my Robinhood account? I got a Robinhood account. How much gold do you have? Oh, zero. Boomer rocks. Haven't you heard that Peter Schiff guy?
Yeah.
Okay. How much Bitcoin do you have? I don't want to talk about it. Yeah. Why not? Because it's a big part of my net worth, and I'm kind of embarrassed. How often do you use DeFi? Every day. And look, I'm way on the other side. I'm a couple months away from turning 60, although I do get to hang out with the young people now. But I want to do something as we get started. You guys are going to laugh. But look, we're recording this on St. Patrick's Day. We're going to use it for lots of different days. But we're recording on St. Patrick's Day. But that's not the reason I'm wearing green. I got green here. But I also have the green pants on today. But that's not the reason. The reason is I have the Bitcoin Bull shot game. And so I'm wearing the green pants because of green candles, because I
love it.
am going to take full credit for the last week. Bitcoin has pumped 30%. Why?
30.
It's all because of me. Last year on Friday, or last week on Friday, when everyone was freaking out about SVB and bank bailouts and failures, what did I do? I broke out my Bitcoin orange pants. I wear them every Friday, except today.
Yeah.
I wear them every Friday for Bitcoin Friday. And I broke out my Genesis block socks, which the Genesis block of Bitcoin has a picture of the London Times saying, "Chance are on the verge of second bailout for banks." And I said, look, what's going to happen, they're going to get bailed out. They'll get bought on Sunday, which happened.
Yeah.
And that is going to be hugely positive for Bitcoin and for crypto because it's a devaluation event for the currency. So anyway, everyone can thank me later, but that's what happened last week.
We were thinking word for word, this is how the intro would go. Yeah. Unbelievable. Great to have you on. Anthony Verrill, millennial entrepreneur. This is your kind of conversation, crypto guru. Great to see you. How was your week?
It's good. I mean, like Mark said, it's been full of green candles. I mean, I love that we get to have this conversation today with somebody with his expertise from macro and from traditional finance, and having this much enthusiasm and this much knowledge in the crypto space. So I'm excited to dive in.
Nice.
Yeah.
So, Mark, you were a senior investment director at the University of Notre Dame.
My alma mater.
I was going to say some of that green's got to be some of the Irish too.
Well, okay. Now you're going to make me show all my clothes. But I got Fighting Irish.
Nice.
T-shirt on. So I'm all in. This is my day.
Yeah.
St. Patty's Day is my day.
Favorite movie, Rudy?
Yes, and actually the other piece, because it's Friday, I got the Guinness Black on because I will be having a Guinness this afternoon.
Well, I think we all want to get this podcast recorded and get a couple of Guinnesses in us, that's for sure, in the next little bit. But continuing on, you founded Morgan Creek Capital, managed it back in 2004. You've appeared on CNBC, Bloomberg, Fox Business News, and are now heavily invested and focused on Bitcoin. So run us through, I guess, your expertise and how, I guess, you got crypto pilled.
So why is an OMG, self-described, old macro guy, right? I'm old and I'm a macro guy. How did I leave the world of TradFi and come to DeFi and crypto and Bitcoin in particular? And look, it's a long, torturous journey, and I'll try to do short, but I don't do short very well. 10 years, And if I were really smart, Shad, Anthony, I'd actually be a lot wealthier. I was actually introduced to Bitcoin the same month as the Winklevoss twins. And if you haven't read Bitcoin Billionaires, you should. It's a great book. I mean, unbelievably great book. So well written. It's an easy weekend read. The writer is amazing. But same month, I was introduced by my friend Dan Moorhead, another OMG, old macro guy. And he said, we had invested with him in his macro hedge fund, Pantera Macro. And he called me up and said, come to San Francisco, I'll buy you dinner. And I went out in 2013 and he said, hey, I'm shutting down the fund and giving back the money. And I'm going to spend the rest of my career in blockchain and Bitcoin.
Wow.
And I'm like, why would you give back $1 billion, charging 2 and 20? And I said, look, I was not running drugs on Silk Road. I was not a cryptography student. Bitcoin, I was like, yeah, I'd heard of it, but I didn't really get it. But when he said blockchain technology is the underlying infrastructure for the future of finance, I'm like, I'm in. In 96, we invested in this little company called Google, this little company called eBay. They turned out to be pretty good investments. They were the future of the internet, Web 1. And then we invested in little companies like Alibaba and Facebook, Web 2. Turned out pretty well. So as soon as he said infrastructure, picks and shovels, I'm in. And that fund's done great.
Yeah.
That fund's up like 17x. It's good. But I should have put the money in the Bitcoin fund because it's up 350x.
Wow.
But I didn't. Why? I was a TradFi guy. Back then I wore suits and ties but because my friend Dan said, look at it, I looked at it. And 9 months later, first quarter 14, I wrote one paragraph in a 41-page letter. I used to write these long letters for clients. And everybody say, why do you write so much? No one wants to read that. I'm like, it's not for them. It's for me. If I don't know what I wrote, how do I know what I think?
Right?
So it was for me. And if people want to read it, fine. But I had one paragraph saying, at $500, this is an interesting special situation investment. You should buy some. Guys, I got hate from my clients. You're an idiot. Go back and do your job. We will fire you. Wow. Okay.
Yeah.
And so I did. And the price went from 500 to 178. I'm like, oh, see, they were right. And that was September. 6 weeks later, $1,000. I'm like, no, there's something here. There's something here. And so I did a little more work. And here's the thing. Everyone I know who started in this area started skeptical.
Oh, yeah.
Yeah, of course.
Right? And I think that's totally logical. Yeah. But everyone I know who actually did the work is now a raging bull.
Yeah.
If you didn't do the work, they stay skeptical and afraid and it's a Ponzi. But if you do the work, which I then did, and true story, my son graduated from Notre Dame in 2015. I said one word, not plastics like The Graduate. I said blockchain. Go to San Francisco, talk to Dan, go to work at Coinbase. We were investors in Coinbase. And he comes back, he's like, Dad, okay, yeah, maybe it's gonna be a big deal, but I'm gonna take the job with KPMG, safe, gets me to San Francisco, good, dutiful son. Okay, you're gonna hate it, and he did hate it, and he quit 9 months later. And so when Coinbase went public, he called me and said, Dad, okay, fine, you were right.
Really?
But you're not as smart as you think you are.
Yeah.
I'm like, oh, do tell. I told you to go to work at Coinbase. Yeah, but you didn't lever up the house and put it all in Bitcoin. I'm like, you little shit. That is fact. Yeah. So another year goes by, and finally I had done enough work, had enough confidence, went to my clients and said, no, you're going to do this. So we dipped our toe, 0.25%, 0.5%. The really aggressive got to 1%, little Bitcoin, little Ethereum, just started at the time. And things were going all right. We invested with Dan, we invested with Blockchain Capital. That was basically the only two choices. And, there was no A16Z crypto then. There was no Paradigm Capital. There was nothing.
Yeah.
And so 2017, I met this guy, right? I met this guy, Pomp. And everybody knows Pomp, and he's, big guy out there. He was from North Carolina, and we met, and I didn't think anything of him. But then I heard him on a podcast, which is the Power Podcast. Podcasts are amazing. I heard him on a podcast with Patrick O'Shaughnessy.
Yeah.
I'm like, saying some smart stuff. I'm going to follow him on Twitter. I followed him. I'm like, like I would have said that. That sounds like something I would say. That is something I said. Like, I got to meet this guy. So we met for breakfast, turned into lunch, turned into dinner, turned into the next day. Boom, had to do something. So we formed an entity called Morgan Creek Digital.
Yep.
And said, we're going to go become venture capitalists in the digital space.
Wow.
And everybody's like, come on, how are you going to do that? You've never been venture capital. I said, I've been investing in venture capital for 20 years. I kind of know how it works. And we're going to do this. And it was audacious, but we got lucky, right? In fact, Julian Robertson, famous hedge fund manager, a lot of people would leave him, go start their own funds. And he'd say, or they would say to him, Julian, do you have any advice? Like, yeah. Make sure in the first 2 years you get lucky.
Yeah.
Like, really good advice, hard to follow. But we got lucky. So we ran into two of the most visionary CIOs, these two CIOs at Fairfax County in Virginia. I was just with them the other day.
Yeah.
And Catherine and Andy immediately got it. Catherine in particular. I mean, 10 minutes in, she was like, I'm in. I will find a way to get my board in. And I know this is a long answer, but the thing that was interesting about it, she invited us up to the board, and we go up there. And this is 2018, first quarter 2018, the middle of a bear market.
It's a bear market going on right now.
The price had peaked at 20. We were down at 11. Okay. Then by November, it was 6. And then the bottom dropped out and went from 6 to 3. So this was kind of summertime, early summertime, going to the board. So the price was stable around 8,000 or 9,000. And 2 hours, 2-hour meeting, giant board. We're pitching them on why this is the big thing and why this is the great thing. And we get to the end. And the chairman, who is a uniformed police officer, full uniform, helmet and gun on the table, Harley outside, sunglasses in the pocket, couldn't make this up. He says, all right, Mark, I hear everything you say. But you're telling me I got to go tell my guys that I just put their retirement in drug dealer money? Like, no. Well, okay, I see your point. No. What I want you to tell them.
Why would he say that, though? Why would he say that? Explain more about that.
Because the media said it's only good for drug deals and terrorists, right?
Yeah.
That's what crypto is. They're still trying to say that. That's why they closed down Signature Bank, right? They're trying to perpetuate that narrative. Because, look, the technology of blockchain and Bitcoin in particular threaten the livelihood of the banking system.
100%.
The banking system for 800 years has been the system of trust. We trust them to hold our assets of value for us so that we can utilize them in a functioning economy. And they charge 6 to 8% of GDP globally, 7 trillion with a T. And I know the T word gets thrown out a lot, guys. A trillion is a lot.
Yeah.
Right? The three of us would have to sit here together for 31,710 years and spend $1 every second. That's 1 trillion.
That's crazy.
Wow.
Yeah.
So 7 of those babies every year gets paid to JP Morgan and Goldman Sachs and all the intermediaries around the world to make our economy work. All of that friction can go away with blockchain.
Yeah.
All of it. And once you see that, Chad, once you have that eureka moment, that all blockchain technology is an operating system for transferring value. You can't unsee it. And look, I'm old, and this is a young man's game, but I see it, and I can't unsee it, and I can't not embrace it and be excited about it.
Well, when you look at like the iPhone or Facebook, you know, the demographic that it normally went after when it was launched to where we are today, like my grandparents, they have iPhones, they have Facebook accounts. And that's what? When was Facebook launched? 05, 06?
05, 06, yep.
So that's a long time, like if you fast forward another 17, 18 years. But do you not think that Bitcoin will advance with all, like, you know, demographics and across the world in a shorter time frame than, say, 17, 18 years?
Great question. So yes and no. So all trends happen faster. Right? If you go back to all technology trends, they all follow the same S-curve. First 10% over the first decade, next 80% over the next decade, and the last 10% over the last decade.
Okay.
Now those do get elongated. Like if you go, the one I always love is interior plumbing. Right? Still not 100%. Places in North Carolina still don't have it. But no, I'm just kidding around. But if you look at television, it went up a little faster. After radio, if you look at the internet, it went up a little faster. You're right. Bitcoin is steeper. The first 10 years, right, the science project part was the same. The early adopters, the nerds, the geeks. Okay. But now that ramp up of the S curve, because all S curves look the same, I do believe will be a little bit faster. Not a lot faster, but a little bit faster. Because ultimately, technology advancement requires a series of events. I'll give you a great example. Remember pets.com?
Yeah.
The poster child for the failure of the internet. The internet will never work. It'll never be more important than the fax machine, according to Paul Krugman. It was on the cover of Fortune. Tire Track running over that sock puppet that was in their ads. Chewy.com is the same business, worth $20 billion. Why? Because we needed broadband, we needed the iPhone, we needed GPS tracking, we needed better websites, okay? We need a series of inflection points that allowed the technology adoption to progress. And yes, it will, all inventions, all innovation starts with young people.
Yeah.
All of it. Because they don't know what they don't know. And they're not afraid. And I tell the story, and before it was not politically correct to talk about Bill Cosby. When I was growing up, he was a comedian, and we had these record albums, little black discs you spun around. And he had this bit where he talked about this kid. And this kid could ride his bike anywhere.
Yeah.
Up over the swing set, along the top of the fence, 360, 6 inches off the ground. He never fell. First time he fell, someone told him about gravity. So young people don't know what they don't know. Mark Andreessen, 19 years old, when he changed the course of history by inventing the browser. Before the browser, the internet was too hard.
Yeah.
It was too hard. Unless you were a hardcore nerd or geek, no way you were getting on the internet. No way your mom, my mom, no way. The browser, invented by a 19-year-old, but then what did he do? He got an old guy, Barksdale, to come in and help him build the company. Then they sold it.
Yeah.
Okay. Then who invented Google? Young guys, Larry and Sergey, guys in their 20s. And then they brought in other people to help them build it into one of the most powerful businesses in the world.
Yep.
So now we have this, pseudonymous Satoshi Nakamoto who created Bitcoin. We don't know if they're old, young, whatever, probably a mix. But ultimately, the nerds and the geeks always adopt because all technology starts at the fringe. Who's the first users of the internet? Porn.
Yeah.
First user of pagers, drug dealers. First user of mobile phones, drug dealers. Okay. First users of Bitcoin, drug dealers. Why? Because they're not allowed in the mainstream systems. You're not allowed to get a banking account. You're not allowed to be part of normal society unless you're deemed like alcohol. It's a drug.
Right.
Addictive drug. Tobacco, addictive drug. Mm-hmm. Those are okay. Multi-billion-dollar businesses. But unless you're deemed okay, then you're not engaged in society. So you find the technology that allows you to operate. Mm-hmm. But then it becomes mainstream. We all have one of these. In fact, most of us have two of these.
Yeah.
And that was one of my big aha moments, Shad. So I was...
There's two.
Yeah. So you got two too. So yeah. So I I grew up in Seattle. And a lot of my friends don't work anymore because they're smart enough to go to work for that little company called Microsoft. I thought they were kind of rough looking. And I defend myself. Look at the picture, the original Microsoft 11. Look, we all look bad in the 70s. They looked worse than most. Now, they're all multi-billionaires, and I'm not, so I shouldn't make fun of them. But I didn't go there. My friends did. And Steve Ballmer's mom famously quipped, "Honey, why would you work for that company? No one would want a computer in their house." Mm-hmm. He has 18 billion reasons he was right, Mom was wrong.
Yeah.
So I was back in Seattle in 2008-9, right before the mobile net was about to be a big thing. Craig McCaw's house, a famous investor in mobile phones, and his family office. And I said to the guy, do you think the mobile net is going to be as big as the internet? Because the internet was pretty big, right?
Yeah.
And big deal. Google, eBay, a lot of big companies, Microsoft. And he said, Mark, ask me if they want a computer. Like, yeah, whatever. Ask them if they want a phone. Like, well, I already have two. I probably don't need another one. Yeah, the mobile net's going to be bigger. Well, the truth net, as I call it, can be even bigger. Right?
Yeah.
Truth net, which is where everything runs on blockchain, it's going to be bigger, like orders of magnitude bigger. Why? Because we're building on good tech instead of crappy tech.
Right.
Client server technology was garbage. Yeah. Now, at the time, we thought it was awesome. But I used to wait for my Dell computer, which I should have saved as a collector's item. I bought it from Michael Dell from his dorm room at the University of Texas.
Did you really?
PC's limited. Oh, yeah. I mean, I sent the money right to his dorm room. But here's why. Because he won the Editor's Choice Award in PC Magazine, which I didn't find out until 10 years later that he paid for.
Really?
That was the Ziff Davis business model. If you paid them extra, they gave you the Editor's Choice and your sales went up.
Right.
Oh my God, I thought they earned it. So anyway, but I had to wait 5 minutes for that thing to boot up. But I thought it was awesome because now I didn't have to write stuff. I could type it. So the PC evolution was big. But then when we connected them, remember waiting for a dial-up modem, the AOL guy?
I still have that noise in the back of my head as the sequence goes.
God, just horrible. Horrible. And so... in fact, I saw a funny meme the other day. A mom said, I make my kids watch this GIF, and it was the AOL guy going, I say, I make them watch that for 3 minutes before they can boot up on their computer. Just to make them think how I felt. But the transition to the internet was pretty big.
Yeah.
Because it was the beginning of an exponential curve. Okay? If you think about an exponential curve.
And we're there right now, you think, with Bitcoin?
Even better. So if you think about an exponential curve, Web 1, okay, it's the area under the curve, and that line's pretty parallel, right? If you think of a log curve that we all learned in trig, right, starts here and then goes up like this. And when you're parallel, the area under the curve is not that big. Intel, Microsoft, that's a lot of wealth that was created.
Yeah.
Then you start to the knee of the curve, the area under the curve gets bigger, right? That's Web 2. Trillions of dollars. Now we're going to Web 3, where we're going parabolic. The area under the curve becomes also almost infinite. And that's where with Bitcoin, Web 3, metaverse, multiverse, all of these things, it's as inevitable as all of the other innovations, right? When we had mainframes in 1954, 14 years later, it was inevitable that we would have microcomputers because they invented the microchip. Then 14 years later, it was inevitable that we'd have personal computers because they made microcomponents smaller. Then in 1996, they came along and said, oh, TCP/IP, we can communicate with one another. We're using it right now, voice over internet protocol. Then, and it's always 14 years, back to that young people start everything. It's half a generation. Then in 2010, this came along. That came along in 2007, but it took a couple of years to catch on. Apple's stock went down 40% in the week after this was released because people said no one will ever pay $500 for a phone. You're right. They'll pay $1,500 and be happy about it. So 2024, which is next year, is the next iteration. And it's the truth net. So internet, mobile net.
This is interesting.
Truth net. Why truth net? What the internet did is it broke the monopoly that the governments had on information, right? So for millennia, the church had the monopoly. You didn't read, you didn't write, you went to church, they told you what to think, they told you how to think, and then the printing press came along, busted that monopoly wide open. People could translate books, exchange information, read, write. Dark Ages goes away, we're enlightened. What happened? Governments, either state-owned or state-sponsored, media then told you how to think.
Right?
Growing up, my parents sat down at 6 o'clock and listened to Walter Cronkite tell them how to think, what to think. And he gave talking points, given talking points, and it didn't matter who starts, ABC, NBC, CBS, it was all the same. So then what happened? The internet came along, busted that monopoly wide open. So who benefited? Did the creator of the internet benefit? Tim Berners-Lee? Nope. Who benefited? Zuck. How did Zuck benefit? He stole an idea from the Winklevoss twins, gave it to the people for free. By the way, if something's free, you are the product. Then he takes the data and sells it and makes a lot of money. Using TCP/IP that we're using right now.
Yeah.
Phone companies lost a bunch of money. They tried to block it. Al Gore saved us. He didn't invent the internet. He did save the internet by blocking that bill. So now what happened? Well, media and communications, all that market cap now is with internet companies. ABC, NBC, CBS is now Netflix.
Yeah.
Yep.
It all went into this Web 2 into the Web 2 realm. Well, what's even bigger than that? What's the biggest business in the world? Financial services. Financial services runs on trust. In the old days, I would lend Anthony money, and I would write down in my ledger, Anthony owes me $100. He would come back, pay me 110. I'm an unscrupulous guy. I had changed the number to 200. I violated that trust. He's like, no, I only borrowed 100. Anthony, it says right here 200. You owe me, and I could take it to the king, and he'll enforce it because he trusts me. So what happened? The Medicis came along 800 years ago and said, no, Anthony, you're a fine gentleman. You keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will determine that the ledgers match. But here's the problem. I'm buddies with them. So I can pay him a little something, something, change my book. And when he brings his 100, mine says 200, the Medici say, oh, look at that.
Right.
Mark's number's right. Anthony, pay up. So trust was violated. And for 800 years, we have trusted that system. Think about banking, what we just experienced last week. When you put your money in the bank, it's not your money. It's no longer your money. It's the bank's money. No, that's my money. No, it's not. You have an IOU from the bank, and it's good most of the time. But if they don't want to honor it, they don't have to. Read the fine print. And here's the thing. I have a recurring nightmare. Like not every night, but a couple times a year. I wake up, and I've gone to the ATM, and punch the button, and it says zero. Like, how would I prove it's not zero? I don't have any statements. I haven't had a statement in years. It's their word against mine. Who are they going to trust? They're going to trust them because of the money.
Yeah.
So Satoshi Nakamoto comes along, and whoever he, she, they are, probably a group of people, okay, they created this amazing thing, this third ledger. So now I have a ledger, Anthony has a ledger, and there's the perfect ledger. There is truth, not trust. We don't have to trust it. It's truth. It is permanent, immutable, encrypted, not violable, not bribable, not corruptible, like this current system. And he and I can trust it. And here's the cool part. We don't have to be proximate. We don't have to exchange the money physically. We don't even really have to know each other. We could be pseudonymous.
Why do you think younger generations just embraced this technology so quick?
Because
they grew up with it. They grew up with it.
But history has shown previous generations to say, this is what we did, this is what we grew up on, this is the system that you should follow into play. But this generation just like threw a bomb and said, screw this, I'm going to do my own thing.
The technology reached scale to where it could be mass adopted by that generation. And they've gotten screwed their entire lives, for the most part.
That's the big part. Now, the other thing is, when there's a huge dislocation, right, people are scarred. Right? My grandparents' generation abhorred debt.
Yeah.
Debt was evil.
Yeah.
You didn't even have a credit card. In fact, I say I don't have one with me, but when I speak, I'll show people a credit card. I say, "What is this?" I say, "Oh, it's a credit card." I'm like, "No, it's not. It's a debt card." How much would you use it if it was called a debt card? You wouldn't. In the old days, if you were in debt and you couldn't pay, you went to debtor's prison. You were fed bread and water. And then if you didn't pay after a year, they beheaded you. They literally, being a debtor was bad. Now,
real estate bad.
If you have a big line of credit, you're a big man, a big woman. You're the more credit you have, the better. It's the same thing.
Yeah.
JP Morgan said it best. Gold is money. Money is an asset that exists in the absence of liability. Everything else is just credit.
Yeah.
Everything else is just debt. And so what happened to this generation, global financial crisis, the banks violated our trust. They made a bunch of bad loans to all kinds of bad things, sliced and diced and securitized and sold the risk, and everyone got rich, and it collapsed. And then they got bailed out. And so the generation was like, whoa, if I can't trust that system.
Yeah, exactly.
I trust it. Think about this. If you get lost, do you stop and ask directions?
No.
Especially not in the South. Because in the South, they'd say, well, go to where the oak tree was and take a right, and then go to where the general store was and take a left. I'm like, I don't know what that is. I haven't lived here for 20 years. So you trust code. And Bitcoin is code. Crypto is code. And code is inviolable. Here's the thing. The Bitcoin blockchain is the most powerful computer in the world. All it is a computer. It's a networked series of computers. It is 1,500x more powerful than the CERN supercomputer. Not 1,500%, 1,500 times more powerful.
Can you repeat that again?
So the Bitcoin blockchain, right, the Bitcoin network, so the network of all the nodes, the computers, all the GPUs and the ASICs that are pointed towards the algorithm, that computer is 1,500 times more powerful than the CERN supercomputer.
Wow.
Here's the thing. It's been up for 14 years, 99.99992% of the time, almost no downtime, hundreds of millions of transactions, not one fraudulent transaction.
Yeah, that's a big one.
How many times have you had to get a new Visa number?
Yeah, exactly.
Because Visa got hacked.
Good point.
Right? And do you know why Visa gets hacked? Because Visa doesn't run on a supercomputer. Visa runs on a mainframe computer.
How much are these banks
written
doing
in
with
COBOL?
Think of the security fraud that these banks deal with every single day.
Every day.
Oh, yeah, it's crazy.
Because it's old technology. And old technology has its flaws as new technology gets enabled. And so look, Anthony's generation and below all love living in the digital realm. But here's the thing. They're neophytes compared to my granddaughter. My granddaughter's 6 months old. She is a Gen A, Generation Alpha. She will never have a leather wallet.
Yeah.
She will never use paper money.
Never.
And when you let that sink in.
Can I ask you a question? How long will it take before cash is obsolete?
Decade?
Yeah.
Decade?
Ish.
I was going to say 10 to 15.
And that's tough.
10
I mean,
to 15
5 years, 15.
Yeah.
But yeah, I'm going to say a decade-ish.
It's going to...
Could happen faster. Look, if Operation Choke Point, which I believe is intentional, is successful, I think it'll happen faster because the CBDCs will happen faster.
Yeah.
And a CBDC, to me, it's pure evil.
Yeah.
It's like all the negatives of fiat plus surveillance and programmability. Imagine this nightmare. It's Friday today when we're recording this. Imagine this. You get paid. You go out, have a couple Guinness, as we were talking about, and you drunk text about the president.
Yeah.
You wake up the next day and your money's worth 70 cents on the dollar. What? Hey, we told you, if you violate the rules, we can change your money. If you've never seen the video by Augustin Carstens, the guy from the BIS.
That's crazy.
The guy who looks like Kingpin.
Yeah.
I used to call him Jabba the Hutt, but he doesn't really look like Jabba. He looks like Kingpin from the Spider-Man movie. It's this giant guy. And he gives a minute and 49 talking about why, of course, we should be able to control your money. That we should be able to force you to spend it by a certain date or it vanishes. Or how about this? How about Walmart pays the government a little something, something, so your money doesn't work at Target? That could never happen. Could it? Yeah, could.
The seed's been planted.
Yeah.
Anthony, I know you're itching to ask a few questions because
I didn't let you guys answer.
No, that's good. But this year, like, go ahead.
Yeah, I mean, I think obviously I'm very aligned with what you're saying on like the absolute source of truth with like both on the Bitcoin and the Ethereum blockchains. I mean, I guess what's your take on like tokenization and like actual seeing like physical assets being backed by digital, but by digital assets such as like NFTs, and how that's going to kind of play into like the global like commodity market and alternative assets in general?
No, look, Anthony, the thing I love about podcasts, I was on a podcast once and the guy was saying, someone told me the thing about a great podcast, you're supposed to get good guests and let them talk. I said, no, a great podcast, this is kind of what we're doing now.
Oh, yeah.
Yeah.
Is the host have a list of great questions that they ask, they listen to the answer, and then they ask a better follow-up question. That is a great follow-up question because that question, I think questions are way better than answers. Like our whole society is built around answers. But the real thing in life is to be able to formulate and ask good questions. And that question is so important because if you think about why would a digital asset be important? What's about digital property rights? Well, what is an NFT? A non-fungible token. What does non-fungible mean? Individual, not replicable. Token. What is a token? A token is not a little thing. It's not a little gold coin. A token is a line item on a spreadsheet, a blockchain, an immutable, encrypted, permanent ledger, that third ledger. Every asset, every stock, every bond, every currency, every commodity, every piece of art, every case of fine wine, every collectible car, every private business, all $700 trillion, there's the T word again, all 700 trillion will be tokenized. All of it. All of it. And all value will transact over blockchains. And the blockchain network, Bitcoin network, Ethereum network, all of it will do to financial services what the internet did to media and commerce. It will move all of it into a frictionless, perfect system. And the question about tokens and NFTs, as I said, everything will be tokenized. Everything will transact across these blockchains. And NFTs, people think of NFTs as monkey JPEGs. I'm like, well, that's one use case. That's an art use case or a collectible use case, like a Pokemon card. But the better use case is stock certificate, bonds, derivatives. Think about a smart contract. Derivatives. Why is Goldman Sachs and JP Morgan and humans involved in derivative contracts? Humans that can be bribed, humans that can be manipulated. It kind of reminds me of the scene, and I mean, I'm a huge Top Gun fan, Top Gun Maverick, I think best movie ever made.
I'm with you
it's
there.
It's like when the drone ranger is talking to Maverick, and he's like, look, your time is numbered, Maverick.
Yeah.
We're going to have pilots, they don't need to eat, sleep, take a piss. And Maverick's like,
not today.
Sure, you're probably right, but not today.
Yeah.
No, not today. Not today. Not everything is going to go, but tomorrow and the day after.
It's coming.
All of it. All of it. Everything that can be valued. And that's why we need to change the nomenclature from NFT, which people think is monkey JPEG, to digital property rights.
So let me ask you this. If you're like, do you speak with a lot of novice investors that are looking to get into this space? Like what is the message that you try to teach and educate them on to fully embrace this industry? Whether they're like, I assume probably people under 35 are already well versed, obviously, but people 35 and older, like what's kind of the first steps that you try to explain to them?
So the first step is start. So how do you start? Okay, is own something that's digital. And the easiest thing to own to me is Bitcoin.
Yeah.
Why? Because Bitcoin is digital gold. Gold is money, right? An asset that exists in the absence of a liability for 5,000 years. A single ounce of gold bought a fine person's suit. From Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. Single ounce buys a fine person's suit. The perfect store of value. And it's also a perfect store of value if you think about stocks. Remember, it says stocks making new all-time highs. I mean, not right this second, but, lately. Really. You realize that's because we price them in a currency that's going down. If we price stocks, the S&P 500, in gold, it's dead flat since 1996. Well, what happened in 1996? There's the tech bubble, and then the first bailout, and then there's global financial crisis, and another bailout. And what do? We increase the supply of money. When you increase the supply of money, what happens to the value of that money? It goes down. So gold has been this perfect store of value. Well, Bitcoin is digital gold. What do I mean by that? If you think about gold, it's not very portable. Like if I had a brick of gold here, a bar of gold, and I wanted to break it in 3 pieces and send it to you, I feel like I'm a strong guy, but I'm not that. I couldn't break it. Okay, it's hard. Even if I couldn't stuff it in my computer and send it to you. If I want to send you the equivalent of 1/3 of a gold bar in Bitcoin, it's like 7 punches of a button, and it's in your wallet. So it is a better form, and I think Bitcoin, like everybody says, I have 3-4% of gold as a hedge against inflation. Replace that with Bitcoin. Simple. And how do you do it? Well, you could buy a security. It's not a perfect way because they trade at a discount because they're closed-end funds like GBTC. I would argue you should buy our ETF, right, which uses futures to get exposure. So you could buy CRYP, but that's just one way. But that's the first way. Second is to own some other assets, right? If you think about art, you like art, survey NFT land and find some collectible or digital art that you think is interesting and play around with that. Think about Ethereum. Ethereum to me is a bridge to the digital world. And here's where this comes from. If we think about pre-internet, there were no connected anything. Every computer stood on its own. They didn't really talk to each other. The internet comes along, and because of Internet Protocol and TCP Transfer Control Protocol, Internet Protocol, TCP/IP, they can now talk to each other. And that's the base layer of the internet. Well, on top of that, there's something called FTP that allows us to transfer big files. Then there's SMTP that controls email, HTTP that controls websites, and then www that ties it all together.
Yeah.
So if I think about this new world, this Web3 world, well, Bitcoin is kind of like the base layer. It allows us to transfer value seamlessly, permanently, like digital gold, to money. The base layer of money is gold. So, okay, that's that. On top, what ties it all together? This toolkit, this Ethereum, www. It's kind of like that. Filecoin allows you to store big files. Okay, it's kind of like FTP. And then in the middle, is it Cosmos? Is it Polkadot? Is it Solana? Is it Avalanche? I don't know yet, but that's because we're in development. And so that's one outcome. The other outcome is people say, oh, all these other protocols don't work because they're not proof of work, and proof of work is what's important. So it's going to be Bitcoin and then Lightning and then L3 and L4. That could happen too. And then there's another group that says, no. There's going to be all these different protocols like Ethereum and Bitcoin and Avalanche, and they're going to talk to each other interoperably, and they're going to have bridges. I mean, I'm not a techie. I'm not that. Yeah. We'll let the techies solve it. But ultimately, that's a long, twisted answer to say, how do you start? You just start.
Yeah.
And you own some digital assets, whether that's Bitcoin, whether that's Ethereum, whether that's Avalanche, whether that's owning an NFT. And ultimately what you're going to find is more things that are in your normal realm are digital.
Yeah.
Think about music, right?
100%.
Shad, you're old enough. Anthony, you're too young. But we had these black discs called record albums. And it's funny when I think about it now that I put it on a turntable and I put a little needle on it and it made sound. And
quality was so good though, Mark. Quality was
so good. But the problem was, Shad, so I had this Foreigner album, first Foreigner album, and I lent it to my friend Lucky Rodriguez. And he's in San Antonio, Texas now, and he still has my Foreigner album. And I'm still pissed about it. Okay? Now, my wife did buy me tickets to the Foreigner concert in June, so I'm pretty happy.
Cold as ice, Mark?
As cold as ice. As cold as ice. Cold storage. But then we had MP3s. So we could take that physical analog music and make it electronic. But the problem with electronic is you guys want to listen to Cold as Ice, so I send you a copy. Copy paste. You're happy. I'm happy. Who's not happy? Music industry. Exactly. Very unhappy. So what did they do? They did what you do with all hierarchical corporations. Every hierarchical corporation has a single CEO, single home office, single server. So you arrest Sean Parker, you blow up his server, end of Napster.
Yep.
Right? So now what do we do for music? We all stream digital music and we all pay for it, and the music industry's happened. But even better, we've disintermediated the record labels who are taking 60, 80% of the money, and now the people are getting, and now with decentralized music, I just saw this yesterday.
Yeah.
There's a decentralized group that just dropped music directly to fans. No middlemen, no middlewomen, no leakage. And you talk about the number of simultaneous participants in a digital world versus the analog world. You want to go to a rock concert. I don't go to the Foreigner concert. There'll be 40,000 boomers like me there listening to Foreigner. Okay, whatever. When
Fortnite.
Oh shoot, Scott. The DJ Scott.
Which one?
Oh shoot.
You talk about
the guy who did
about Travis Scott and
concert.
Fortnite.
Travis Scott. Thank you, Travis
Scott.
Scott. Okay. Travis Scott performed in front of 2.1 million simultaneous people.
Isn't that crazy?
2.1 million. I mean, my mind is blowing.
During COVID.
I mean, I've talked to Live
everything.
Nation, and they're just blunt about it. They're like, we're building amphitheaters in the metaverse. We are already there planting flags. I mean, that's where we need to be, because you're basically operating with no bounds. There's literally no bounds as far as attendance, as far as bandwidth. I mean, it's.
But what's cool about that is, why did those people go there?
Yeah, community.
One, they trusted Fortnite. Yeah. They trusted Fortnite because that was where they collected the town square in Fortnite. And then there's this kid who posted, you know how your phone will now tell you how long you're online? He posted a picture. He was on Fortnite for 17 hours and 54 minutes in one day. That guy lives in the metaverse. And so they trusted Fortnite, and they wanted to listen to Travis Scott.
Yeah.
And he went to them, and wow, that is power. And
well, to your point earlier, you said if you do the work, you know. And obviously, when you know, that's what's normal to you. And that's what this generation is growing up, and this is what they know.
And it's, you're right. It's the familiarity, but it's also an ease of use, right? When you take friction out, like going to a concert, physical concert, you got to get in your car, you got to drive, you got to park, you got to acquire the tickets, and now getting tickets is hard because the bots buy them and then they resell them. All of that disappears in the metaverse. And now we're getting to a point where you can kind of be there. I don't know if you've seen this, and I don't do it that often, but I have a Meta headset, an Oculus headset. They had this cool thing, like 10 years ago, every night at 11 o'clock, I would watch SportsCenter so I could see the top 10 plays of the day.
Mm-hmm.
Every night I would do that, just religiously. Okay, now they do the same thing in Oculus, but instead of 2D kind of a big view like this, they have a 3D camera sitting underneath the hoop at the basketball game.
Yep.
Like these guys are flying at
What's this on? The ESPN app on the Oculus?
Yeah.
I have an Oculus. I hate it, but I use it sometimes just to like.
Oh no, I hate it. I hate it, and it makes me sick because it just it's not perfect, but the idea that you think about how much would I pay to have a 360 camera sitting at the 50-yard line of the World Cup finals.
Oh yeah,
of course.
So I don't have to travel to the Middle East.
Yeah.
I would have paid a lot for that.
I would too.
And then you could have millions of people having the same collective experience. And then, and this is where it gets really cool, then you can have sportsbook.
Yeah.
Like in the headset. Like you bet with your friends and you're hanging out with your friends and you're all at the game together.
That's coming.
And then, anyway, I get more excited than I probably should because it's in the future, but
well, one of the reasons, another reason we wanted to have you on is you're an advisor in a Bitcoin ETF, which is managed by Advisor Shares, which is it's very familiar, the name, to many retail investors, knowing with their cannabis ETF MSOs. So I guess I'd like to learn more a little bit about how the ETF itself is structured.
Yeah. Yep. So look, I've known Noah for a very long time. And Noah and I share a vision that active management is really, really important. That, there's no such thing as passive management. We talk about passive management. There's no such thing. It's just slow active, right? Over 30 years, 85% of the S&P companies disappeared. So it is active. There's a group that decides who's in, who's out. They put in Tesla and kicked out GE just in time for GE to go crazy. So they don't make all good decisions, but the key is that active management wins. So when he approached me that he wanted to have an active ETF around getting people access to Bitcoin, I was like, done. So we tried to get a spot Bitcoin approved, and the SEC in their infinite wisdom has said, no, there cannot be a spot ETF. So I said, all right, how about futures? And well, we've already approved 2 futures ETFs, so you guys could hold those. Because what we do through active management is we either hold Bitcoin futures, get exposure to Bitcoin, or we hold cash. And people say, oh, but you can't time the market. Like, well, here's the thing. There's this thing called trend following.
Great.
Commodity
great
trading
book.
advisors, CTAs, and the turtle traders and all this stuff. And all trend following means is when markets are trending up, you're long them, whatever it is. And in the old days, it was commodities or bonds. And for years, and it was mostly in Chicago, these trend following advisors, these CTAs, killed the markets right, by timing the market. But it wasn't every day, right? They would be long when it was going up, and then it would turn down. And when it started to go down, when the momentum turned negative, they would get out. And then when the and you never get the tops and you never get the bottoms, but the math works. Yeah. Because if you're down 10%, you got to be up 11 to get even. You're down 20, you got to be up 25. You're down 50, you got to be up 100. So if you can truncate some of the downside, not all of it, just some of it, the gains then take care of themselves. And so what these commodity trading advisors figured out is I can generate lower volatility returns with long-term better compounding. And so we said, all right, let's do that with Bitcoin. Bitcoin is a trending asset. Why does it trend so much? Because it's run by humans. If you think about CTAs and trend following in stocks, it doesn't work anymore. No. High frequency trading and Renaissance and Ken Griffin and all the, just too much chop. You can't have chop for trend following to work. Bitcoin's still run by humans. So it's very trending. It goes up for a while, then it goes down for a while, then it goes up for a while. And so we launched this fund to help investors with their number one fear. If you ask people, why don't you own Bitcoin? Well, I don't know, because it's too volatile. But you do realize over 3 years, 5 years, 10 years, and 14 years, it's the best performing asset in the world, right? Well, not the last 6 months. Like, no, over all long periods of time, 3, 5, 10, 15.
Best performing asset in the last 14 years, Bitcoin.
Oh, or none.
100%.
It's not close. And the other benefit, it improves the risk of every portfolio every time you add it because it's uncorrelated with your other assets, right? I'm a University of Chicago guy. I actually got to study under Dr. Markowitz, was amazing, Nobel laureate. And he says, if I have a cash portfolio, it's the riskiest portfolio you could ever have because every day you hold cash, you're losing to inflation. So I can add bonds, which are riskier. They have higher volatility than cash, but the risk of my cash and bond portfolio goes down because they're uncorrelated to each other. If I add stocks, volatility goes down, risk goes down. I add hedge funds, real estate, private equity, anything I add to that portfolio, risk goes down, not up. He won the Nobel Prize for this. It's everybody's common knowledge. So if you think about it, why do I own stocks? Because it's uncorrelated with bonds and they have a better risk reward, better Sharpe ratio. So then I add other things that are uncorrelated. But here's the problem. International stocks, 70% correlated. Bonds, 30% correlated. Bitcoin, 0.15 correlated to stocks, 0.0 correlated to bonds. How can that be? Because stocks and bonds returns are driven, GDP growth, inflation, corporate earnings, taxes. Those have nothing to do with Bitcoin. Bitcoin is driven by millennial adoption, the technology itself, regulation, and money supply. Those things are uncorrelated, And therefore, it doesn't mean that they're negatively correlated. It doesn't mean it zigs when it zags. It just means they don't matter to one another. So when you add Bitcoin to a portfolio over the last 5 years, if you took 2% instead of compounding at 11% for a diversified portfolio, you would have made 14. That's better. And your volatility went down. And here's my favorite stat of all stats. So people say, I don't like Bitcoin because it has 80 vol, 80% volatility. That's a volatile asset. You know another asset that has 80 vol? Amazon.com stock. 26 years, compounded at 41%. Put that in your calculator tonight, 1.41 to the 26th power. It's a big number. It's 99,000% since inception. Okay, big number. But every year, including this year, every single year, double-digit drawdown. On average, 31%. So every year, on average, you lose a third of your money if you hold Amazon. But when was the right time to sell it?
Never.
That would be never. But who bought it in 1996 and held it till today? Jeff, mom, dad, ex-wife, Bill Miller. That's it. Everyone else is shaken out by the volatility. And if you look at Bitcoin for 14 years, it's compounded in the high 80s, twice as good as Amazon, same volatility, but people are afraid of it. So we created this vehicle, CRIP, that truncates that volatility down to 40 to 50%, still high, but that's because volatility isn't bad.
Yeah.
Every asset in the world that compounds at a high number has high volatility. That's just math. It's pure math. I can guarantee everybody you have no volatility. Put it all in the risk-free rate. Get no volatility, you make no return. So volatility is not your enemy. In fact, I have a t-shirt that says, embrace volatility.
Yeah.
It is your friend. But you want to do it in a diversified portfolio with strategies that are active that allow you to control the volatility so that you take risks that you want to take and risks that you're compensated for. When you take risks that you're not compensated for, that's not intelligent. When you take risks that you're compensated for, that's how the intelligent investor works.
CRYP, CRIP, is a ticker symbol. It trades on what?
Pardon?
Trades on what?
Trades on, that's a very good question. I guess that trades on NASDAQ.
This has been amazing. Yeah. I cannot believe all the information that you've taught us. I don't know if you remember that scene in Forrest Gump where he just goes out for a run and everybody just starts to like join him. If you decide to go for a run, I will join you, Mark. That's how motivated I feel.
That's one of the best compliments I've ever received. Because, look, I appreciate that very much. Because what that means is I achieved my goal, right?
Yes.
My goal, it's a gift, right? You gave me a great gift today to come on your show. That is a gift. And when you're given a gift, you should take advantage of it. And the thing that I always try to do, and that compliment says that maybe I achieved that, is speak in a way that is approachable and understandable, as opposed to people who throw out jargon and want to prove how smart they are. And we've all met these people. Like I met Myron Scholes, another Nobel laureate. This dude, that's all he wanted to do is prove how smart he was and how dumb you were.
Yeah.
Like, dude, I know I'm dumber than you. I know that. You don't have to make me feel that. So that means a lot to me that you would share that. So I appreciate that.
I think one of the greatest gifts is knowing how to read people. And, you've always got to pivot to every single person that you're speaking and meeting with in life. And the best way to do that, and I think we should be doing a lot more in this, and I think Anthony and I kind of demonstrated that today, is just sit back and listen when somebody wants to provide you some helpful information, which is great. I am going to ask you one last question, though.
Sure.
Will we see $1 million price tag with Bitcoin?
Oh, for sure.
Yeah.
Not tomorrow, but yes. And here's why. So it's just math. I have a hashtag just math. And so much in life really is just math, right? Why does Amazon stock rise over the long term? Not every day, not every month. It's math. Right?
Yeah.
They provide a service that has become absolutely necessary for everybody. And they basically earn a massive spread because they're the only ones that can do it effectively. They match buyers and sellers, right? They don't make stuff. They're not a manufacturer. They are a search engine. And they match buyers and sellers, and then they deliver stuff. So it's a great business. Or, you think about arbitrage, right? Arbitrage is time-tested business. If you can buy an asset in one market and sell it simultaneously in another market at a different price, that is a perfect trade, right? And it's hard to do in an electronic and digital world, but it still exists, and there are people who do arbitrage. So if we think about why does it exist? I said it's digital gold. Well, what does that mean? Well, it means that as people realize that this is a digital store of value, okay, it will approach the monetary value of gold. Okay, well, what's the monetary value of gold? Well, there's about $10.5 trillion of gold above ground in the world. Half of that is earrings and necklaces and chalices. That doesn't count. I mean, it's real and it's wealth, but that doesn't count. The monetary value, gold bars in central banks, the base layer of money, right? All the money in the world, all the currency in the world is based on that base layer of about $5 trillion of gold. Okay? Why? Because custom and precedent. 5,000 years, we decided that was it. And we tried other things. We had puka shells and stone wheels, but gold has been it. So at $5 trillion, so we're at about 400 and something $billion for Bitcoin. At 5 trillion, that gives us a price of about 400K per coin. Right? You divide the number of coins, there's about 18 million. There were 21 that will ever be minted, but some are lost and stolen. But it's just, we get to about 400K per coin. Well, how do we get to 1 million? Well, some would say, well, we just get the other part of gold, right? The physical gold. Physical gold has an advantage, right? We all heard the stories. If you were trapped in some terrible place and you need to bribe somebody and you had a little gold earring or whatever, you could get out of Dodge.
Yeah.
So physical gold will always have a role, because tough to say, hey, I'll send you some Bitcoin, trust me. Yeah, and electricity might not work, but whatever. So physical gold will always have a role. The way I get to 1 million is a little bit different. Actually, the person you should have on is Murray Stahl. Murray he's even older than I am, so he's a true OMG. Super successful value manager, multi-billion-dollar firm called Horizon Kinetics. He makes me look bearish.
Wow. Okay.
I mean, like seriously, he makes me look bearish, and he's forgotten more than I'll ever know, and I love the guy. But he talks about when you invent the perfect money, all inferior money will eventually go away. Mm-hmm. He says Bitcoin is the perfect money.
Bitcoin's it.
Yeah.
It's a permanent, immutable store of money, store of value that exists in the absence of a liability with no nation state.
So the point I get
is money. And so what he says, total money in the world is about 86 trillion. So he gets a number way above $1 million per coin.
Wow.
But if you just went to 10 trillion, part of the way there to the 86 trillion, because I believe
that's 800,000 according to your math. Then
exactly, yeah. So that's how you get closer to the $1 million number.
$8 to $10 million as far as a price tag for Bitcoin one day.
Yeah. And the thing that most people need to realize is you can actually fractionalize Bitcoin. You can buy as little of it or as much of it as you would like.
Exactly.
It's a crazy common misconception.
No. And someday, some enterprising young person will say, you know what? We're not going to talk about Bitcoin anymore. We're going to talk about Satoshis.
Yeah, sats.
That's why on Twitter, if you look at my handle, it's at Mark Yusko, MarkYusko, hashtag 2.1 quadrillion.
This is sats.
There are 2.1 quadrillion Satoshis. That's 12 zeros in the world. Mm-hmm. And because there are 100 million Satoshis per Bitcoin, 21 million Bitcoin. And I'm going to give a shout out. There's a young woman named Ella Huff, and her mom's big Bitcoiner. And we all have theories as to who Satoshi is and all this stuff. But she came up with this amazing theory on why there's 21 million. So everybody's like, why 21 million? Well, most people don't know that Satoshi Nakamoto their birthday is 4575. Why is it 4575? Well, 45, 1933, was Executive Order 8102 that made gold illegal to be owned in the United States. 1975 was when gold was made legal again. Okay? Well, if you take Executive Order 8102, you get 21. I'm sorry, 8106. Let me get this right. 8106. 8106.
No, 8106, you'd have 15, no?
No, it's not 8. It's not 8. It's 60. It's Executive Order. Oh, I'm getting this wrong. 6208. I'm going to have to go back and get the number. But it's a 2, a 1, a 6, and zeros. And she said that executive order, okay, 21 and 6 zeros. That's why we have 21 million Bitcoin. So I thought that was pretty clever. It's 6102. That's it. It's Executive Order 6102.
So a story within the story. Where do people find more information about you, Mark?
So I'm on, I said on Twitter at Mark Yusko. We have a website, morgancreekcap.com. Advisor Shares has a little bit of blips and stuff. I'm all over the internet. I actually like talking. You might have figured that out. I do a few podcasts. I do a weekly podcast, something called On the Margin, every Friday. Comes out on Saturday mornings, actually. But I'm easy to find.
This is amazing. I'd love to have you on every day.
Yeah, it's been great.
You're too kind.
It's amazing. Like I said, we had a list of questions, but we just sit back and listen because some Mustangs aren't meant to be saddled. So just let them run. And
well, let's just do it again, and I promise I will shut up and answer all the questions.
No, I think this was great because a lot of the stuff that we were going to ask, you pretty much answered. But I think this is great to educate people. 35 and under, I think there was a lot of great dialogue for them to understand.
Yeah.
And the people that are 35 and older too, the big takeaway is just get started. So ETF CRYP CRIP with Advisor Shares. Appreciate the explanation and how it all is structured and how it works and the de-risk of it all. But most importantly, Anthony and I thank you, and please keep in touch.
Yeah, thank you, Mark.
Oh, I will, for sure. And again, thanks for having me. Happy St. Patty's Day. And I'm sure we will do this again sometime. It's a lot of fun.
Let's go get a Guinness.
Yeah.
It's Friday afternoon.
Yeah.
All right. Cheers.
All right. Thanks, Mark. Hey, everyone. Thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.